You are watching Market Watch, the brief overview of the key events from the world of finance. Speaking at Stanford University, Federal Reserve Chairman Jerome Powell confirmed his willingness to reduce the key interest rate this year. He emphasized the slowdown in inflation, and also mentioned the appearance of unexpectedly strong macroeconomic reports. Nevertheless, according to him, later this year there may come a time when a rate cut would be appropriate. It is obvious that the appeal of the head of the American regulator was addressed to investors who began to actively sell shares. Key stock indexes collapsed. And although Jerome Powell's message has reached the addressees, the activity of buyers remains very weak. Most likely, investors are waiting for the publication of a report on the U.S. labor market, which will take place this Friday. A moderate deterioration in the situation may support key stock indices, as in this case the probability of 3 key interest rate cuts will increase markedly. A slight increase in unemployment will confirm the fact of a controlled slowdown in the economy, restoring investors' confidence in the Fed's ability to ease monetary policy. But it is important to take into account that unexpectedly very weak data in the labor market report will not support the stock market, but will only worsen the situation. When discussing the risks, including those related to the upcoming release of U.S. unemployment data, it is important not to lose sight of gold. The quotes of this asset have once again updated the historical maximum. The reason is that more and more investors are aware of the readiness of key stock indexes to form a deep corrective decline. This can happen at any time, including after the release of data on the labor market. Consequently, investors not only lock in part of the profits on long positions in risky assets, but also hedge risks by buying gold, which can benefit from a reduction in the key interest rate. Bearish sentiment in the stock market is reflected in the cryptocurrency market. Nevertheless, we do not observe panic, although the risk of developing a deeper corrective wave of decline continues to increase. Bitcoin often forms sideways, indicating the uncertainty of the market. Therefore, until its return below $60,000, the bullish scenario remains a priority. But only the return of quotations above 70,000 will allow us to talk about the return of buyers to the market. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.